Today, we're talking all about interest rates. Are they on the rise? And if they are on the rise, where are they going? What are we looking at? And what should we look out for? Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages, and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftika joining us once again. For those of you who don't know Ifti is a trained accountant and mortgage broker who's been in the industry for over 10 years. And he is also one of the founding directors here at WYS. Thank you for joining us again, Ifti. How are you doing today?
I'm very well, thank you. How are you, Gemma?
I am good, thank you. So today we're talking all about interest rates. So I've got some questions that some of our customers have been asking us, and I thought we should ask some of these. I think it will help everybody, all of our listeners. So the first thing I thought we should probably talk about is the base rate, as it's directly kind of linked to interest rates. So will the Bank of England increase the base rate, do you think?
Oh, it's a very good question. It's not for us to sort of decide on that or for us to speculate, right? Obviously, the Bank of England base rate is the rate at which the banks borrow from the central bank or the Bank of England in this case. So that's kind of what a base rate is, right? Or we call it the interest rate as well. So this is actually decided by a committee which comprises about 8 people who sit down. I think that meeting will be happening very soon, right? And then they will decide on what the base rate should be. So that is a decision for them. It's not an individual or the governor of the Bank of England who decides, or it's not even the chancellor who decides that, right? It's the committee who decides that. But if you look at some of the things that's happening around, say for example, the banks have sort of increased their interest rates in the back. And also we kind of see that inflation has been rising. So given all that, there is a chance that the rate may go up, right? Because the governments usually use the base rate to control inflation, right? So theoretically, that's how it works, right? So we may see that given the interest rates rising. But again, that's a decision for the committee to make.
Okay, so with that being said, do you think then that the Bank of England's base rate will rise in the future then?
Okay, so to be honest, the base rate has been a rock bottom, right? Because as it stands, it's only 0.1%, right? I've never seen that before. Before the pandemic, it was about 0.75%, right? But they made an emergency decision to bring it down to 0.1%. So we've never seen it at that levels, and we always thought that it wasn't sustainable at that levels, right? Because we knew at some point it had to turn. But, you know, inflation is rising. We know that the fuel prices have gone up. We know that house prices have gone up. We know so many other things have gone up in price, right? You know, you go to the supermarket, you know, you spend more than what you used to spend, right? So given that kind of background, the central bank can intervene, right, to control inflation, just to make sure that it doesn't get out of control. One of the mechanisms they use is controlling your base rate, right? So if they generally increase the base rate to bring the inflation down. So that's why there is a chance that they may do it, because inflation is now picked up, right? Unlike, you know, what it was a few months ago during the COVID time period.
So then, do you think that the mortgage interest rates are going to rise in the future too?
Yeah, so Bank of England base rate is not 100% connected to the mortgages, right? It is, because it does influence, but a lot of other factors go into account before the banks decide what the mortgage rates are, because it depends on what the swap rates are, it depends on what rates the government borrows money. There are various factors that come into play, and obviously it's demand and supply based as well, right? So if you kind of look at it that way, in the last few days, we've seen banks increase the rates, right? Quite a few high street lenders have increased rates, right? So they are not reactive. They are generally proactive, right? So therefore, if they feel that there might be something in the air, they sort of, you know, take precautionary measures, right?
Yeah,
so,
exactly.
Yeah, we've already seen that, right? So I'm not sure how much more it will adjust, because, like I said, they are very proactive, right? But, you know, we don't know, right? Because I don't like to speculate that, but, you know, we have already seen some rises for sure, probably in anticipation.
And typically we notice, don't we, that when one or two of the main lenders raise their interest rates and the mortgages go up, then it seems the other ones seem to follow suit quite quickly afterwards.
Yeah, that seems to be the trend. Looking at like my history in the past, that has always been happening, right? Because in a span of 3 days, like so many lenders increased their rates, right? So it did happen. Some of the big ones did it, and some of the bigger ones followed, right? And generally the smaller ones follow them as well, because that's kind of the trend, right? So yeah.
So then, who do we think it's going to affect the most if the mortgage rates rise? Is it going to be first-time buyers, remortgaging? Like what's?
Yeah. So if you take the type of buyer, obviously first-time buyers are generally, I work a lot with first-time buyers. They're always on a budget, right? So obviously if the interest rate goes up, their affordability drops a little bit, because if they were able to afford £1,000 before, now it might be 1,100 or something like that, right? So if that goes up, obviously it'll affect them, and they might not be able to stretch to buy that house that they wanted, right? So there is that type of buyer who will be affected. But I think most importantly, it is people who are on a variable rate that will be affected the most, right? So I know clients who are on standard variable rates who are paying about 3.5%. So if the Bank of England base rate goes up, you're affected. And also there are some people who are on tracker mortgages, discount mortgages. So they are likely to feel the rise right away, because it's all kind of connected, right? So if the base rate rises, or the bank standard variable rate rises in case of a discounted mortgages, you are going to be affected, right? So those are the ones that we'll have to be a little careful about. Yeah.
Ifti, I've spoken to a few people in the last couple of days. They've said that they are on an SVR, so standard variable rate. But the thing is they're worried. They're worried that they've had a bad year. They've been self-employed and they've had a bad year of COVID. So they're worried. They almost think, it's not worth me applying for a regular mortgage. What would your advice be to people like that who are in that situation?
Okay, there is some truth to that, but it's not the whole truth, right? Because if you're on SVR and your finances have been affected, a lot of lenders will close the doors, but not all lenders will close the doors. There may be some options out there. There are lenders who sometimes just ignore the whole COVID period and look at the past. So there are those options. And sometimes we might be able to work out a deal with potentially the same lender as well.
Yeah.
Right? So there are various options out there. So I'd say don't give up hope. Speak to an advisor. Don't think that, it's the end of the road for me, I just have to wait till things get better. I don't think that's a good option, right? So you probably want to speak to an advisor who can guide you on this one.
Definitely. And what kind of measures can people take if the interest rates do rise? Like what kind of things can they do now to help them with that?
Okay, so obviously you've got to be very careful here. If the interest rate rises and if you're on a tracker, obviously you're going to have a problem, right? Again, I'm not speculating that interest rates will rise, but if you think interest rates are rising, generally a fixed mortgage may be a better option for you, because if not for anything else, you will know exactly how much you're going to be paying over the next 2 years or the 5 years. You will know, right? Because that will stabilize things, right, for you. So because you can budget it, right? But with a sort of a variable product, like a tracker or a discounted product, or if you're on SVR, you're kind of stuck, right? Because if the base rate increases, your rate will increase, right? Obviously, the Monetary Policy Committee meets at least, I think, every month, right? So if they sort of again decide to increase the rate, you're going to be paying more, right? So it's probably best way to sort of plan that. So in these instances, variable rates probably is not the best option, right? But again, you've got to look at all your circumstances. There isn't a one-fit-all sort of solution, right? That's why I always say it's probably best to speak to an advisor. But variable ones might be a little tricky.
Yeah, and I suppose, as well, if someone's on a discounted rate, then they could incur early repayment charges. But for those people that are on trackers and SVRs, there could be something
that's
that they
right.
can do.
You're right. Yeah, you're right. So usually people who are on SVRs are unlikely to have an early repayment charge, right? Obviously, you're going to look at your contract, but it's unlikely. And a lot of tracker products are unlikely to have early repayment charge as well. Not all, but a lot of them don't, right? So you probably want to check your documents. So if you think rates are rising and you think it's probably best way to look at it now, right? Because otherwise you'll get caught, right? So, you probably want to review it. If it is the best option for you to break the deal, maybe you can break, right? So it's always best to speak to an advisor on that anyway.
And I've seen quite a lot in the news about fixed term and, should I do a 10-year fixed term or even longer perhaps? So what would your stance be on that? Is a fixed rate a good thing when the rates are rising? And how long fixed should you go for?
Let me answer the question in a slightly different way. I think if the rates are rising, variable is probably not a good option. That's probably the best answer, I think. But when you look at sort of fixed rates, at least it gives you the stability, right?
Yeah.
Now, whether it's going to be a 2 years or a 5 years or a 10 years is a bigger question, right, than just fixing it. Again, it depends on your circumstances, right? This is what I always tell clients, right? I don't really know what I'll do in the next 2 years. I have a rough idea, but I don't know, right? Because life is such, right? How would I know what I'm going to do in 5 years or 10 years, right? Because I think you used the word before. A lot of these mortgages, the fixed mortgages, they have early repayment charge, right? So if you take a 10-year mortgage, you're probably stuck with that mortgage, right? So
it's going to be a hefty early repayment charge,
That's right. So if you want to move house, it could be a problem, right? Sometimes there are options, but it could be a problem because you're kind of stuck with sometimes the same lender. Again, you probably want to speak to an advisor. There are a lot of factors we need to take into account before answering that question. But
like say if someone's going to perhaps move house, we'd probably maybe suggest they do a shorter term rather than a longer one, things like that, right?
Yeah, that's right.
Okay, would you have any other advice for people in terms of the interest rates and?
I think this is interesting times for sure because obviously there are a lot of speculation around, right? I can understand why there's speculation as well because suddenly inflation has gone up, right? So there is a lot of speculation. So we don't know. I think it's always best for people to review their finances in situations like this. And like I mentioned before, we cannot always expect the base rate to be at 0.1%, right? Because there's no other place for it to go other than up. Right? So it's very unlike. Okay, it's not impossible for it to go lower, but it's pretty unlikely, right? So given that, it's probably best to look at your finances, especially if you're on a variable. I probably want to look at it, and even if you're trying to go for longer term deals, it may not be always the best thing to do even if you're fixing it, right? So you probably want to get some advice. People like us, I'm sure there might be other brokers as well who sort of offer annual reviews, right? So you probably want to do that if one is due at least, so that you can see where you stand, right? So I think that might be a good thing to do at this kind of juncture,
Yeah, well, thanks, Ifti. I just wanted to put a little reminder out there to everybody that these questions are common questions that we've been asked, and we're sharing them with you guys. The Bank of England base rate or interest rate does depend on various factors and decisions made by various committees, obviously not us. So just wanted to put that out there. And our regular disclaimer as well, that as a mortgage is secured against your home, it can be repossessed if you do not keep up with the mortgage repayments. Thanks again, Ifti, for some more great advice. I just wanted to let everybody know that these points may or may not be applicable to everybody. So if you're unsure if they're suitable for you, please do contact an advisor. And if you don't have an advisor, I will leave our contact details below, as we are always happy to help here at WIS. Thanks again for joining us this week. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.